Hello, thank you for joining us for the webinar, Spotlight on Proptech, Regulatory Change and its Impact on Businesses. I'm Mark Woods. I'm a practice advisor here at Latera. I practiced law for 10 years, but now I'm lucky to have a job where I get to work with lawyers and other legal professionals to help them improve their workflows and be more efficient through the use of technology. If you'll just allow me just a moment to be a corporate shill, Latera's technology, we believe, is transforming the way legal teams of all sizes draft documents, run deals, and manage cases. And you can learn more about those by visiting us at latera.com. A few housekeeping items before we actually jump into the webinar itself. This is being recorded, so if you have to hop off before our time here is up, don't worry, you're going to receive a copy of that recording. And if any questions come up throughout the course of this webinar, feel free to drop those into the chat or into the Q&A section. And we're going to save some time at the end of the webinar and hopefully get a chance to answer those questions. We do have a fantastic group of panelists, and I'd like to get started by allowing each panelist to introduce himself very briefly. So let's go ahead and get started, and I'll just go ahead and pass it on to Ari. Why don't you just go ahead and introduce yourself, please?
I'm Ari Kaplan. I'm an analyst that covers the legal industry. I practiced law for nearly 9 years, and I actually have the privilege of serving as one of the hosts of the Latera podcast series. My show is called Reinventing Legal. I'm honored to join this esteemed panel today, so thank you.
Thanks, Ari. David, please introduce yourself.
Great. I'm David Richardson. I'm a corporate partner with DLA Piper in Northern California. I've been with DLA for 16 years. I represent a number of emerging growth technology companies as well as a lot of buy-side private equity clients with a heavy emphasis in construction tech and prop tech.
Thanks so much, David. Curtis?
Hi, I'm Curtis Sano. I'm a partner with Holland & Knight in the Tyson's office. I practice with commercial real estate transactions, purchase, sales, finance, and development.
And last but certainly not least, Alex, please introduce yourself.
Good afternoon. Thank you for having me. My name is Alex Lick, and I'm a senior editor at PitchBook. My analysis goes to private equity, venture capital, and M&A. I sort of run the gamut. I'm very happy to be here.
Awesome. Thanks everybody for introducing yourself. Real quick, let's set expectations for what we're going to go over here in the next hour or so. First, we're going to pass things over to Alex, and he's going to take us through the results of our Proptech report that came out in early September. He's going to discuss the current state of Proptech in the venture capital space now that we're moving over into the fourth quarter of the year. Then Ari's going to lead a discussion around how Proptech is changing traditional real estate and the impact of regulatory changes on businesses and the law firms who serve them. And then last, as I mentioned before, we hope to save some time at the end to answer those questions that you might have. So again, just a reminder, go ahead and drop those in the Q&A to the extent things come to mind. We really hope to get to answer those. And with that, I'm going to go ahead and hand it over to Alex from PitchBook. Go ahead and take it away, Alex.
Thank you very much, Mark. So I'm going to go run through these slides pretty quickly so we can save a little bit of time for the conversation, but these are the numbers from our Proptech report. And the big caveat that I'd raise is that these numbers are through mid-June of this year. And the other note, and I think it's important because within Proptech itself, it's something of an umbrella term. Just to define what exactly went into the numbers, we use PitchBook's real estate technology vertical, which significantly overlaps with common definitions of PropTech, specifically companies that are leveraging technology for both commercial and residential real estate. So you're talking about property management software, Internet of Things platforms, rental services, mortgage applications, augmented reality design applications. It's a shortened list, but I wanted to zip through these slides so we can start our conversation. So to summarize 2021, it was a record-breaking year in terms of VC activity. The number that stood out the most, I think, was 1,000. It's something of a magical but sometimes arbitrary number. But we saw 1,000 PropTech investments worldwide. for the first time last year. And in the grand scheme of things, I think it is a little bit arbitrary, but it's also a useful reflection of how active the space was in 2021. The combined value of those investments was $22.7 billion. And just for context, the fourth quarter of 2021 brought in $7.4 billion alone, which was more than any yearly total prior to 2018. The slide in Proptech activity began in earnest in Q2, which wasn't an anomaly to Proptech in particular. We saw the same thing happen across most verticals in VC around the same time. Deal activity slowed by about a third, and analysts blame interest rate hikes, inflation, and the specter of a recession as the biggest culprit. Next slide, please. So here we're looking at Proptech activity across stages, and it's a bit across the board. There has been more focus on the earlier stages, which is common for a maturing industry like Proptech. Series A and B deals were near or beat record highs, and seed stage deals hit a record of 317. So there is that bifurcation between late stage activity and early stage activity and how those two play off of each other. But one thing that we really saw in earnest last year was an emphasis on early stage activity. Next slide, please. And naturally, one of the reasons 2021 was such a big year comes back to bigger check sizes, especially at the later stages. Even in June, we saw the median deal size come down a little bit, though, and I suspect that it's even lower now if we were to update the numbers. These aren't included in these numbers, but I checked our data platform for this discussion, and between January and June of 2022, I counted 23 rounds valued at least $100 million. Since July up until today, though, I only counted 6. So that's not an official number, but just to give a sense of the slowdown of those big $100 million rounds has slowed significantly. And I think there's probably a lot of varying reasons for that, but just from a data standpoint, those so-called mega rounds tend to buoy the overall numbers quite a bit. So when you have a slowdown in those, they end up having a pretty big impact on the overall investment figures. So I think that you'll start to see that toward the end of the year when we're actually able to put together year-end numbers for Proptech. Next slide, please. And with respect to valuations, you see an even bigger impact on late stage valuations this year. The global median dropped from 92 million last year to 64.5 million as of June, which at the time was a 30% decline. Interestingly enough, there wasn't a swift drop off in early stage valuations earlier in the year. The median actually rose by more than 50% to 46 million. I think that there's a common expectation in Proptech and in other verticals where if you see the late stage valuations coming down, that's something of a canary in the coal mine. But that might be overstating it a little bit much, but there is an expectation that early stage valuations would take a cue from those late stage valuations and the drop off there. I don't know if it's going to be as significant, but I think that that's the expectation across the market right now. And I think the next slide is my last, and I'll hand it back off to Ari. But I wanted to talk about exits real quick. And exits to me are, something of it can be a validating point from a data perspective. And I'll clarify that in a bit, but you can see on the charts that 2020 and 2021 combined for a lot of exits, a little bit over $100 billion between those 2 years. And if you add up the prior 8 years, just with respect to exits, you're looking at about $17.5 billion. So it's quite a difference. And I don't think that you can chalk that up to post-COVID exuberance. Typically, when we see that from a venture capital data standpoint, and just in general, it's a sign of maturity and validation for the Proptech market in particular to see several big exits all at once. And then you also see some clamoring among strategic acquirers to go out and get the best assets on the market. That said, I think that it's fair to speculate that the numbers will go down in 2022. The slowdown was already evident by June. Any exit activity, I think, going forward will be dictated by the M&A markets, or at least will be led by the M&A markets. And those acquisitions will probably be done on a case-by-case basis. But in these types of environments, and it may actually work out to the company's benefits. And I'd be interested to hear what other people have to say about that, because there's plenty of VC capital ready to invest. And Proptech companies that were otherwise ready to exit can continue to improve and be ready for the next seller's market. So I think that's a big thing to keep an eye on as we head into 2023. So from a data perspective, I think that's it for me. And thank you. And Ari, I will give the floor back to you. Thanks, everyone.
Thanks so much. Yeah, so as an analyst that predominantly covers the legal industry, I have hundreds of conversations on an annual basis, whether they're on my podcast, in my dinners, in my market research. And right now, it's so interesting to see this convergence of legal tech, insure tech, fintech, compliance tech, and prop tech. Every single data point that I have tried to capture shows an increase in the volume and complexity of regulations, that there's a challenge in terms of data types, a focus on information management and governance, a cultural shift in how businesses are managing their records, and there's been kind of a sea change in certain traditions, signatures, and appetite for AI and other technology, and this increasing curiosity in terms of how do we apply things like the metaverse in terms of a practical application to legal. So it's super interesting, Alex, to see the data that you've captured, the deal matrix. And David, I wanted to start with you. What factors are making prop tech companies specifically so relevant in the current market?
Yeah, many aspects of prop tech are still ripe for disruption. And that's sort of what we saw, especially in the construction tech space early on in the mid 2000s. We saw a lot of that momentum build that's leading us to where we are now. And although it's penetrated fairly significantly, it still hasn't penetrated all the way. So I think that ripeness for disruption in those, for lack of a better term, stodgy markets, I think is going to continue to make it relevant. And as you see the old guard move out, new guard move in, more willing to accept technology in those markets, we're going to see even further acceleration of adoption. What else has made it so relevant, especially in this, this year, is the efficiencies that it provides. Whether it be efficiencies in spend management or project management or asset management, maintenance, those kinds of things. That's really what's been driving a lot of the adoption is really cutting that spend.
Curtis, Alex mentioned an emphasis in many ways on the startup side, smaller deals. How do you see developers and property owners that you're engaged with just generally viewing emerging technologies impacting the real estate market?
Yeah, because when I look at it from the outside, looking at the tech world and how the people view it, if you think about a developer and property owner, they have to make lots of little decisions every day. So what they're not looking for is, oh, we want to just adopt a whole new paradigm aside from a few people, in every company who are really keen on the idea. Most of the developers and property owners are looking for something. How do I make what I do now better? How do I do what I need to do easier? What is my lender requiring me to do? And what does the government require me to do? Things that help them solve this, do something that they do it better. Like for example, one example was when leads started getting popular, more developers started asking, well, how much extra does it cost to get a green HVAC unit? And as it turned out, they cost the same as the regular HVAC units, and almost within a couple of months, everybody wanted the green versions, and that was a sea change that occurred very quickly. But it was doing something that they already did in reaction to an industry requirement, and they actually saved money doing so because of the increased efficiency of the green units.
Alex, you referred to a split, small companies, mid-sized companies, larger companies in terms of funding packages. Do you get the sense that the money is going to solutions that offer an answer to a very specific problem, or that are trying to transform how business is done in real estate generally?
Oh man, I wish I had some examples off the top of my head, but I think it's going to be equal parts both. I think sort of bleeding into one of the other thoughts I had was that one of the big reasons why some companies are getting as much money as they're getting is because they're meeting expectations. I think that that's one of the things that differentiates good companies from somewhat average companies in PropTech and other markets. But in PropTech in particular, it's greenfield. Like it's been said many times before that real estate is the biggest asset class in the world, and it's also one of the least efficient. So just from a startup and entrepreneurship standpoint, that's a big opportunity. And so PropTech is one of those areas where you can do something very small and very specific and very pointed, and you can still have a whole lot of runway to work with. Or you can do something a little bit bigger and try and be something of an umbrella provider of services, and you can still do all in that area too. I think one of the benefits that PropTech has in particular is just how big the market is and how many problems there are to solve. And so you need to figure out what solutions you're going to offer as a PropTech company and do really well with those, and that will dictate what the size of your check is.
And you can see from the data that's on the screen that there are changes happening. David, you referenced construction tech and this evolution to prop tech. And since you started practicing, what are the changes that you've seen that have either prompted the development of new tools, or the changes that tools that have been implemented have had on the industry at large?
Yeah, I think one of the biggest changes, which has been a persistent issue over the last handful of years, is labor shortages. And that's really driven not only in the construction tech, but in the proper prop tech sectors for solutions that help solve that issue. And where we see big inroads being made in that area is with automation and also with virtualization. Those have become two very important components for whether you're a property manager or property owner, or you're a general contractor or even a subcontractor with a very specific focus for a construction project. I've seen big changes there. Also, we see a lot of verticalization. So a lot of technologies that allow for network effects from top to bottom. Building Connected is a great example of that. They were a company that started in 2012. They sold to Autodesk in 2019 for $275 million. And that was sort of the first network effect platform in the construction industry that was connecting general contractors with subcontractors in the commercial property and commercial construction market. And they were a sought after asset by a lot of players in the space because of that network effect that they had built in that verticalization. So I think those two areas where I've seen a lot of movement.
Curtis, from a legal standpoint in this practice, where do you see the opportunity to combine the traditional principles of real estate with technology that will empower lawyers at this sort of cross section?
Well, the interesting thing about as a transactional lawyer, and I don't represent the property company, the tech companies, I represent the real estate companies, is that what we're trying to do is we're trying to help the landowners protect themselves. So some of the things that we lawyers need to do is get ahead of what's coming. What are the threats that will arise from using this technology, and making sure that our forms really reflect what is coming. Like as David said, that understand that the contractors and subs are going to be connected to one another, and how can we all take advantage of that when we're writing construction contracts and loan documents that all are dependent on this relationship between developer, contractor, and sub. Other threats that are out there are in things like Alex mentioned augmented reality, where things that were originally on paper or in the physical world, like signage and animation, are now going to be in the coming years being able to view through glasses or your phone in almost real life, in real time, looking through it at actual buildings.
Alex, given these sort of developments that both Curtis and David have been talking about, and your statistical analysis that there's been this incredible influx of funding into this area, and now it's shifting a bit. What about 2023? How do you expect the actual adoption of Proptech to develop?
Well, it's interesting because as I mentioned earlier, I think everyone knows that real estate is one of the most inefficient markets in the world. Not just in terms of money, but also in time. I mean, the phrase cost overruns is ubiquitous in real estate. It's common, it's almost expected, and it's hard to think of other industries where, a phrase like that is just people brush over it. And not only do a lot of these projects, particularly real estate projects, cost more money than anticipated, but they also tend to take longer to complete. So just those two ingredients alone make real estate ripe for technological change, not just in 2023, but I think you can stretch that out over the next decade, and particularly considering how little adoption has already, it's a greenfield industry, and there's just so much potential to capture. With respect to timing, I think, embracing technology it is kind of a question of timing. And, I think back to a somewhat similar dynamic in ag tech, agriculture technology. You think back, and growing food is one of the oldest industries in history. The way that farmers grow food has been passed down through generations. There not a whole lot of overlap there with real estate, but it was a tough nut for entrepreneurs to crack who were coming in and trying to upend a really traditional and very big industry. And it wasn't just that a lot of farmers were hesitant to try it. A much bigger problem was that a lot of the technology didn't actually work as advertised. So it took years for adoption to take hold, and only after the technology proved itself out and generated higher yields for the farmers that used it. And I suspect something similar is happening in a big market like real estate and Proptech, where there are certain ways that people have gotten used to doing things. Again, going back to cost overruns being sort of an accepted parlance in the industry. And real estate isn't as generational as farming, and I think that it's more open to change as well. But I think the same if factor sort of applies to Proptech. The technology has to work, and it has to yield real gains for its users in terms of time saved or revenue generated, and technologies that work for the customers themselves will prove themselves out in their markets.
David, it was Curtis who said that given the LEEDs requirements and the opportunity to upgrade certain equipment to make it more environmentally friendly, that there has been this focus using sort of Proptech principles. One of the things that has come up in a lot of my research, particularly speaking to general counsel and very senior law department leaders at real estate companies and just generally large organizations, has been this focus on ESG. It comes up in every conversation that I have in terms of what corporate leaders are now being focused on. How do you see Proptech solutions, given Curtis's point about the LEEDs requirements and other things, in terms of addressing ESG concerns, mitigating the risks that are now inherent in them, and just other ways that they could enhance both the environmental nature, but going beyond that to improve the this sector?
Yeah, so tech has really empowered and enabled property owners, builders, contractors, and other players in the in the uh, in the environment to maximize energy and resource efficiency. Curtis's example of the green HVAC systems and being tied into IoT, I think has been a very fertile area in that has allowed companies to speak the E part of the ESG, right, as they're adopting this technology. It's also allowed for improved and efficiencies in asset management, which also has an environmental impact. I think an example there would be Accruent, which was a $2 billion asset management platform that sold to Fortive a couple of years ago. One of the key aspects of why Fortive wanted to buy them was that sort of environmental impact that they wanted to employ. It's also allowed for new materials to come forth that help with LEED certification or just reduce a carbon footprint altogether in construction. There's a lot of really interesting prefab home construction companies coming out. These are not your great aunt and great uncle's type of prefab homes. These are cutting edge, high celebrity sought after types of structures that are really advancing sort of the efficiencies, not only in the materials that are being used, but also the method for constructing them. As with most technologies, there'll be a way for Proptech to impact all of the letters in ESG. I think the primary focus will be, though, for the foreseeable future, on the environmental impact.
Curtis, you talked a little bit about the ability to upgrade at a similar cost. How can those who are in real estate, given those you represent and the sort of organizations that you work with, how can they prepare as there are more options given Alex's discussion of the funding, and as some of these start impacting regulations or other building requirements, how can those in real estate prepare for these, various developments that are coming and are even here?
Yeah, I think what I see going on constantly is that real estate people in various industries have their trade groups like NAIOP, ICSC, the various multifamily trade groups, and what I do see is that the developers, the owners, the asset managers work with their architects and their engineers, and while they're going through these various trade shows, they get exposed a lot to it and seeing what's out there and people explaining to them. But yeah, it's a real challenge because, again, Proptech is one of a deluge of information that streams at people in the real estate industry every day, and so to as it turns out, that somebody has to really hit you with a value proposition or a way to expand your outreach or whatever it is you're trying to do, like expand your signage into the webs, expand your web presence and relate it back to your company. How do I streamline? How do I make it better? How do I make more money for my client? That's the way I think they look at it.
Is there an expectation that law firms or lawyers, outside counsel or in-house counsel will help with this process? Be familiar, be aware, be able to make some sort of, if not recommendations, just to share some insights in terms of what they've seen?
Generally, we are called upon at various points. We're called upon at the purchase and sale of a piece of property. We're called upon when there's financing. We get called upon when there's construction and when there's leasing. So really the touch point that we get involved in this sort of thing is sort of oftentimes at the end after all these decisions have been made. So what the lawyers have to do is try to anticipate as best as they can what's coming along and making sure that their contracts at least provide the opportunity for the owner to control what's going on with their tenants, making sure that when you're the purchaser of a piece of property, you get all the bundle of rights that you're entitled to, and somebody hasn't pulled a fast one and said, say, reserved all intellectual property or something like that, such that, which I have actually heard people try to do, such that a chunk of what you think should be yours is now retained by somebody who no longer owns the property. So really, it's up to lawyers to be protective of what these new technologies can give an opportunity to give an advantage to someone else.
What a great response, Curtis. Like I had even some of those principles you wouldn't necessarily just think about when you're thinking about property or technology related to property. And Alex, that kind of raises this question of, are there concerns that are unique to this area in terms of when someone is funding, a VC wants to come in and acquire or make an investment in, or anybody is trying to enter the Proptech space, are there concerns, kind of like what Curtis was just describing, considerations that are unique and need to be discussed?
Well, I do think that venture investors that get into Proptech need to, and this counts for entrepreneurs as well, like you really need to know what you're doing, and you need to know what problems you're trying to tackle, because Proptech could be one of these very enticing markets. Again, going back to the ag tech example, where a lot of entrepreneurs, went to school at Stanford or MIT, they had it in their mind that a lot of these ideas that they had would be embraced really quickly by the agriculture industry, and that the technology would automatically work, and that there was a lot of promises made, and there wasn't a whole. Sometimes those expectations didn't pan out, and so there is something of a concern there for venture getting into. Is this actually being adopted? Is this actually getting some traction? And separately, I think in markets like this, venture firms remind themselves pretty quickly that sales are equally important to growth. On the venture side, I think it's definitely helpful that the customer bases within Proptech are open to capital improvements, even when the overall environment isn't piping hot. There are opportunities to be had in recessions. There are opportunities to be had in better environments, but venture investors are more long-term oriented. 1 or even a 2-year downturn isn't the end of the world for them. They can work around that if they see light at the end of the tunnel. I think strategic acquirers in particular, always march to the beat of their own drum, especially if they're public. If it's a public company, you're not going to have the share prices necessarily to go out and do shopping sprees, and the management teams are going to be careful to not make moves that are seen as irresponsible or that don't really make sense. There's a lot more scrutiny on a lot of those acquisitions that take place. They're focused really on integrating value and finding acquisitions that make sense for them, short-term sense and long-term sense, ideally both actually. One potential X factor, and I'd be really curious to hear if anyone else has disagreeing thoughts on this, but I think one X factor is that if valuations are hurt on the startup side, that might make some even late stage companies a little bit cheaper for public acquirers if they go to market, that is. I would not necessarily be surprised to see some opportunistic M&A for promising startups that are struggling to raise money. I don't know if anyone else has any differing takes on that.
Well, David, that's a really interesting point. Given the work that you do, as the technology evolves, as the market changes, as Alex pointed out, where there are opportunities, are you seeing your clients or tech companies generally adapting, developing certain efficiencies? Is your firm even getting prepared or harnessing some of its unique skills as a way to take advantage of some of these changes?
Absolutely. Our firm is actually very relative to Proptech. We're taking a holistic view of our global real estate footprint and making some significant changes. You can't necessarily chalk that up to the technology, but certainly our firm is, on the leading edge of technology adoption, and there was a lot of analysis that went into that. On the client side, certainly on the startup side, they're the ones driving the collaboration and engineering of new technologies. So they're certainly reading the market, keeping close to their clients and their customers to understand where the real needs are as we head into maybe some turbulent times or are continuing through some turbulent times, and they're adapting and they're making changes to their technology solutions that are going to further serve those needs. And as Alex was mentioning, we do see a lot of opportunity for amalgamation and bringing different technologies together, either under a private equity-backed platform or under a public company. We anticipate that there's going to be a lot of view towards doing that in 2023, although valuations probably won't be like they were in 21.
So this has come up a few times in our discussion, and we had a very fun prep call, and I thought it was super interesting. So I want to turn your attention here. I hope that's as good a setup as I can make, because this is a very cool part of the Proptech conversation. Curtis, you have really developed a level of authority in augmented reality. And so I would love for you to just share with the audience, and I want to give a quick shout out to the audience, people who are listening. Please feel free to pop in questions if you have them. We're happy to answer them, and I look forward to that level of engagement. But Curtis, while we're thinking of that, what is augmented reality? How does it affect real estate?
Yeah, so augmented reality is generally, it's imposing data and images onto the real world. Many of you have have interacted with this sort of thing when you look at a game like Pokemon Go, where you look through your phone through your camera, you're seeing the neighborhood around you, and you see a monster pop up. Well, if you look away from your phone in the same direction, you will see nothing. But on your camera, on your phone, you will see a monster running away, and you catch it. So if you look at this picture, this is a sort of a sample of what it might look like if in 3 or 4 years, you will see through glasses with apps connect to your phone, and a camera is looking out from your glasses, seeing where it is, and it's all these signs, these advertisements, this art. People's virtual jewelry or whatever are being communicated to your goggles or glasses, and you can see them imposed on reality. Okay, so from a purely tech standpoint, or from a excitement or an art standpoint, this is kind of exciting. You can see like examples of art, like looks like there's a virtual palm tree in the middle of the street here. There's ads up on that look like they're connected on a building. So from a tech and artists and a vendor's standpoint, this is pretty exciting. You can, I've had people say, hey, won't your clients want to sell ad space on the outside of their buildings? And that's where the rubber hits the road. It's like most owners, especially of Class A retail, Class A office, apartment buildings, what have you, they don't want somebody else's advertisements on their building. So the question for the real estate people out there is, if that was your building in these pictures, is this something you want? Maybe the answer is yes, but if the answer is no, how are you going to prevent this from happening? Right now, there is no law that says that somebody can't make a casino ad, as you can see up there on the right-hand corner, upper right-hand corner, appear on your building. There's no law that says this. Right now, for example, the tech is here to do this, because if you look on Google Maps, you'll see sometimes the name of your building or your tenants. When you look at your building from the top or even from street view, it'll kind of give you a little bit of information. Now imagine what it's going to be like when somebody's walking around with their new Google glasses or Apple glasses or Android equivalent, walking around looking at all this stuff and seeing on your building stuff that you didn't put there. You didn't authorize. Perhaps your tenants authorized it in a way that you didn't like, or just somebody walking by, or if you're a apartment or a hotel, somebody, just a visitor or a resident. What if they've got their Facebook page up and you look, and somebody looks at it, and what do they see associated with your building? If this is not okay, what do you do about it, right? So, you have to look at what are the points of control that you do have today. You have your leases with your tenants, you have employment agreements with your employees, you have contracts with your vendors, and you have rental agreements with your hotel guests and your residential tenants. And you need to understand that. You need to, if your property manager went up to this person and said, turn it off, they may ask you back, where in my lease does it say that I have to listen to you? And if the answer is nowhere, you got a problem, don't you?
Alex, this is so cool. I'm always so fascinated by this. Do you expect to see additional investment in these areas?
Well, of course. I think that especially technologies like this, which are they're something of a paradigm shift. I've always been very interested in augmented reality and virtual reality because it goes much farther than any other applications. Like you can use it for training pilots, for training surgeons, for doing all these things that aren't explicitly a piece of the technology, but you can integrate them into what it is that you're looking to do in your specific industry. And one of the things that augmented reality specifically brings up is it creates opportunities for itself. It just kind of builds on itself, where you can think of new applications for these types of things, and you can get some excitement and momentum built by just making sure that the technology works and that it actually has useful applications in the real world. And 5 years ago, 10 years ago, I'd be looking at the screen and I wouldn't have seen something like that coming, and what Curtis was speaking to. There are some very creative minds out there, but they're actually putting those ideas to use in the real world. And I think that we're starting to see those actually come to fruition. And of course, venture investors are going to pay attention to that, but they're also going to make sure that whatever applications are out there are actually being adopted and they're generating revenue.
David, given the sophistication of your practice and the breadth of your work and the clients that you serve, are your clients typically asking about opportunities in new technology?
Yeah, all the time. And especially on the startup side of my practice, I mean, they're the ones driving the technologies, but certainly on the my buy side private equity clients are looking for those next technologies that they can add. And a lot of that is driven by this additional desire for efficiency. I keep coming back to that theme on this presentation, but that really seems to be what's driving everybody's interest in advancing the technologies in these areas.
And Curtis, just to finalize this point about augmented reality, you mentioned the idea of being mindful of the provisions in your leases and other agreements, the permissions that allow for some of this stuff. What kinds of concerns about this technology from a legal point of view should people really bear in mind?
Well, I've actually the things that are in your contracts, your leases, your contracts, your employee handbooks, and other things that are within your control, that you have an agreement with someone, those you need to get a handle on right away, so that when you tell them to stop, they stop, or tell them how they can do it or whatever, they follow you. There's a second concern of the stuff that you don't control. For example, no one asks Google to put in that little tag that's on your building that with your address and hopefully your information or your leasing agent's information or your tenant's information. No one asks you for it. It just appears there. So with that as an example, as these technologies increase, there are people out there who may want to advertise in a place that just happens to be in front of your building. Is there any way to stop that? I do know that there's a couple of startups out there that are working on ways to sell advertising on buildings, and the people that I know happen to be going to the property owners to do this. But why wouldn't there be somebody in Bulgaria wants to sell ad space on your building and without asking you? And how do you make them stop? I know that there's some vendors who are compiling do not tag lists, but this is more of a situation where these people will have this list available, and the responsible advertisers will will contact them and say, oh, I see you got this do not tag list, how can I get permission? Well, those are the responsible ones. What about the people who don't care about you? Are you going to be able to sue them to stop? That remains to be seen right now. Like, if you complain to Niantic, the maker of Pokemon Go, and you tell them remove the Pokemon gym that's in my house, they will do so. But they're only doing that because of a settlement from 2019 in reaction to a class action lawsuit. There's no law that says they have to do this. So you have to understand that as a property owner, you don't necessarily have legal protection. You might be able to cobble something together out of your agreements and copyright law or some other form of intellectual property law, but there isn't something that says no one can tag your building.
You know, Litera is such an entrepreneurial company, and I know many of the folks there and the organizations that they have combined. And I just think about, Curtis, as you're talking about this, that there are so many opportunities. I hadn't even thought of companies that don't tag me kind of built, company that will collect data that says don't tag me, or a company that says you can advertise, or having almost like a whole new breed of organizations in this area is fascinating. And yet we're talking about challenges, right? And so, David, I wanted to just turn to this idea of the changing regulatory environment. What's going to guide a lot of this development? As I mentioned in a lot of my research, the changing nature of regulations, the shifting political climate, all of these things are driving lots of distinctions in how many of these things can evolve. What are the main regulatory challenges that your clients are facing today?
It's actually a long list, and it actually depends on what segment of Proptech the company is in. But the big ones are going to be environmental and permitting. For a lot of my fintech clients that are in construction and Proptech, privacy, data security, and the financial regulations and financial licensure is a big area. I have insurtech clients that are in the Proptech and construction tech space. So, licensure state by state on the insurance side is a big issue for them. For anybody who touches any payment processing, DSS is going to be, payment processing regulatory considerations is going to be a big issue. And then I'll tell you one that has touched on a number of clients across the board in the Proptech space is the evolving rules around independent contractor classification, or the gig worker rules. This has been particularly sticky for the construction tech companies that are dealing with contractors, like, for example, in property maintenance, the property maintenance space. That's one that is probably caused most of the angst among many of my clients, other than some of the others that I mentioned.
Mark, you and I are both embedded in legal tech. Just wondering, are you seeing, in terms of similarities between Proptech's impact on real estate and the way that legal tech has changed the nature of professional services?
Yeah, I think so. And honestly, we've heard a lot on this call about motivations for changes, right? And I think the way that I would think about this would be thinking about motivations for change in the legal tech space. And if I were to simplify sort of what we see as the major motivators with legal teams adopting new technology, they really fall into a couple of buckets. So you've got one set of folks who essentially the old way of doing things is just drudgery, right? They're miserable doing things in manual, tedious ways. And then you have a whole other set of folks who are motivated by the bottom line, right? We've heard the word efficiency a lot. How can I get more done with less? How can I help the bottom line? How can I be more profitable? And I think what you see is with the most successful things, they're going to hit both, or they're going to check both boxes, right? They're going to help folks not do drudgery, and they're going to help the bottom line. And I think that you kind of see that in both industries. So like one anecdotal example in the Proptech industry is I've got a good friend who does property management. I'm in a college town. He manages a bunch of property that includes, collecting payments, communicating with tenants, making sure all the maintenance is taken care of, and then dealing with the owners of the property itself. The old way of doing things, he literally had to do that all in a Microsoft, an Excel spreadsheet, right? He had to communicate with tenants, and he'd have a list of all the properties and all the tenants in those properties, and he would literally live in that spreadsheet. Anything happened, he would have to go and put it into the spreadsheet, right? Did they pay on time? Did they have any communications about maintenance? Now he does it all through a piece of software, right? He has a piece of software that handles that entire relationship between him and the tenants. He can use it to collect rent payments every month. He can use it to communicate with the tenants. He has it in his leases that they must use this piece of software if they're going to be a tenant in his with his property management company. And it's hit on both of those boxes, right? It has actually made his life, it's taken some of the drudgery out of it. He was miserable doing everything in a spreadsheet. It took him a lot of time. It's also helped his bottom line. I mean, he told me that, the old way of doing things, he could essentially manage 60 properties on his own. And then to expand beyond that, if you're going to do things in the traditional manual way, he would have to add staff, right, to start doing, and just add all this overhead. Now, without adding staff, he can actually manage over 300 properties. So not only has he made his life a lot more enjoyable because he doesn't have to do things the old way, he's actually made his business more profitable and has helped his bottom line. And you see the same thing in legal tech, right? The times where legal software is really helpful to legal teams and lawyers is where it checks both those boxes. So, one example, and I know that I'm sort of, singing the praises of the company here, but I'm kind of paid to do that. Latera makes products that checks both those boxes. Like one examples of those products is a product that we call Kira. Kira is an AI-assisted contract review platform. We've trained this system to use artificial intelligence to find the things in contracts that lawyers need to find when they're looking at contracts for their clients. And the old way of doing that was very, very, it was pure hell from a drudgery standpoint. Lawyers had to manually review it, look at contracts, use post-it notes to sort of point out things that they were interested in. And the work product was essentially a spreadsheet where they had to literally type everything out that was relevant to a particular document, say, for example, in a due diligence review, the old-fashioned way. So, we've got a product now that can do that first pass review of tens of thousands of contracts so that lawyers don't have to do that. And that does tick both the boxes, right? They don't have the drudgery of reading all those contracts. And then also we spit out a nice piece of work product that they don't have to do manually, right? We will actually generate a report that will have all the inputs from that AI assisted review from a contract perspective. So I think there's definitely parallels between the two industries and sort of motivations when it comes to adopting them.
Curtis, so Mark's talking about legal tech and its impact on the broader industry. We have been having this wonderful conversation about prop tech. I mentioned the convergence of insure tech and compliance tech, and there's med tech, fintech. What do you see as coming next, the next spotlight area for the influence of technology?
Well, I mean, I think what I see is that technology is like water. It's like filling in everywhere. There's lots of smart entrepreneurs out there looking for ways to do things. So you know, a lot of things have tech in them that they didn't used to, like music, entertainment, video, even insurance. But the real thing about these things is that they come in waves as more of a media blitz, you know, like blockchain, for example. Blockchain is not a new technology, but when it got associated with Bitcoin, everybody got excited, and we had a big to do about it. But blockchain has been around, it's still around, but the hype has gone down. I think what's going on out there is that tech is trying to go into a lot of places, and it's having a harder time getting through certain places, like say government, because government has procurement and budget constraints. You know, places like you know, like insurance companies, where the insurance companies have such big masses of documentation that have to be absolutely correct every single time, that it's hard for them to switch over. So, you know, I think that tech is pretty much everywhere, and sort of the sort of big eruption of buzzwords around things is coming when they do find solutions that the business is able to incorporate into what they do and make it better. So I'm not sure what's next. Maybe, I know David mentioned this earlier in a side conversation, is maybe like vote tech.
Well, David, are there ways that you think firms or the clients of firms can better prepare for what is coming next in prop tech and these other kind of ancillary areas that it's touching?
Yeah, I think you know, one thing that we're doing and that I've noticed just in the, you know, over the course of my practice is that we're really upgrading our knowledge management and knowledge resources, and there's a lot more sharing among practice groups within the firm. So, you know, maybe 10, 15 years ago, I wasn't necessarily pulling in real estate partners to address an issue for an emerging growth company. There's a lot more of that cross-pollination, you know, cross-platform sort of knowledge sharing and advice. And then if I can also plug Kira, I can't remember an M&A deal over the last 4 years where we haven't used Kira, whether even on the sell side or we're selling a client and we're building out disclosure schedules. That has been a really groundbreaking technology for our you know, I as a partner, I don't do much of the contract review anymore, so it's mostly, it falls on our junior associates. But I can just see the quality of the product and the timeliness that it turns around has been really invaluable in our diligence processes.
Nothing better than that comment. This webinar is going to be reduced down to a 15-second time slot. But look, David, Curtis, Alex, such a privilege for me to get to facilitate this conversation with such industry leaders. I'm going to turn it back over to Mark, but I'm grateful to Latera for giving me this chance, and I've really enjoyed this conversation.
Thank you, Ari.
I just want to mention, if anybody has questions for the panelists, feel free to reach out to the team. We'll make sure to filter the questions to everybody. Thank you so much, David, Curtis, Alex, Ari. We really appreciate it. My marketing folks would be remiss if I didn't mention that, you know, Latera, we believe we're making some really important products, especially if you're a transactional lawyer or a deal team member, you know, we've got a few exciting products that you can check out. And one of those products is actually Kira, which David mentioned. Thank you for the plug there, David. We actually have a lunch and learn coming up later. I think it's next week, that we're going to throw in the chat. If you're interested in actually taking a look at it, we'd love to have you and sign up and come take a look at it for yourself. But other than that, I think that's all that we have here. Again, thank you, everybody. This is very informative to me. I'm just imagining now, you know, competitors putting augmented reality advertisements above their competitors' buildings now. So we'll have to figure out how to deal with that. So everybody have a nice, good day. Thank you so much.
Thank you.